Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 6th of August. All right. Now, as we gear up towards the non-farm payrolls, the week's been on almost hold as we wait this data. Now, equity markets slightly up. It's nice to see them moving. Okay, it gives us something to sort of work with when once the non-farms payrolls do drop. Major currency pairs really sort of stuck at this stage, just waiting for the numbers. But this is a pretty easy sort of, not really concept, but an easy one to get with the numbers, right? The Fed has been talking about employment numbers. Once they get to full-time employment, whatever that number that is, they haven't really been specific with that, but improved employment is a step closer to higher rates. That's all you've really got to think about. So weaker employment, rate hikes are further off. So with the dollar index, you can see here, it's just edging up. It's enough to break this short-term sort of sideways downtrend. It's by no means is it ready to go higher, but I tell you what, strong non-farm payroll numbers will give it a real shot in the arm. So just be aware that this is what we're looking for: average earnings, non-farms, and the unemployment rate, which if I just scroll down, it'll just be there. So keep an eye on that. Now, at the same time, we do have the Canadian employment numbers coming out there as well, right? So really choose your poison there. It's obviously the US numbers will impact the major currency pairs, and that includes dollar CAD. But if you're looking for a potentially easier trade, the CAD or the CAD crosses may be the easy one. Take out the US dollar out of the equation and look at the CAD, because when you look at the Canadian numbers, there's only a couple of numbers to consider, right? You should have the unemployment rate, employment change, right? When you look at the non-farm payrolls, there's about 6 or 7 different variables. So it's a little bit harder to digest. And with that comes more volatility as the market sort of hammers away as the numbers drop, right? So there's 2 ways to sort of do it. But you know what, and not in hindsight, but in actual fact, it's probably easier. Let the numbers drop, give it even 10 or 15 seconds is enough to get that initial sort of knee-jerk spike out of the way. And then we're back to normal markets. If the numbers are strong, we should start to see the dollar move to the top side. If they're weak, it dribbles off. Now, what pairs do you trade? Well, let the charts tell you that, right? As I said, the dollar index starting to sort of looks like it's ready for a move higher. The next move will determine this. But we've got that trend line, right? That creates liquidity around that area where dollar Swiss, I mean, if anything, is a bit of a sort of a horizontal level there, but it's in the middle of nowhere. So it's probably going to be a little bit more volatile. Dollar yen also. Now, dollar CAD, as I said, this has got good trend lines, right? Unfortunately, there's 2 variables coming out, the US and the Canadian employment numbers at the same time. That may be too hard to digest, but once again, the perfect storm here, if we get, say, for instance, strong US non-farm payrolls and weak Canadian data, well, it's like a double whammy, right? You get a double impact. And with oil falling, dollar CAD could shoot to the top side 100+ points pretty quickly. At the same time, if we get strong US numbers and strong Canadian numbers, you get that sort of knee-jerk reaction. It doesn't really go anywhere. So that's what I was suggesting. If you're looking at the CAD, maybe look at the CAD crosses. Euro, well, it's right in the middle of the range. If we do get some variance, strong or weak on the US numbers, it will move, but it's not exactly easy. We don't have any trend lines close to sort of utilize as far as getting into liquidity. Sterling, it's sort of belting into a narrow range, like a wedge formation. It's ready for a move. The downside, this support level here is the only support I can see for like 300 or 400, 500 points. So any negative news out of the UK will be a good trading opportunity to the downside. Once again, strong US numbers will give us that downside move. Aussie, really tight sort of ranges here. Lockdowns, big time in Australia. It's going to be a negative impact on the Aussie. So once again, strong US numbers, probably a nice move to the downside. If the US numbers are weak, with that negative impact on the Aussie will probably rally a little bit, but not as far as, say, the dollar index, for instance. And Kiwi, right, little squeeze to the top side. We've got a nice trend line here on the downside, which once again supports adds flavor to a strong US number, because we can get straight into a trade there on the break of that trend line. All right, there's not much more to sort of think about this, right? You can overthink the whole situation. The main thing is just focus on the non-farm payrolls, let the numbers drop. We've got trend lines, utilize the best pairs with the best technical setups. And that's where the cash will be for the end of this week. All right, guys, all the very best. Cheerio.